Good morning, Ian. How are you doing today?
Hey, great. How are you?
Good. Ready for another edition of the IanCast?
Absolutely.
Are you ready to be into more trouble with the Apple stock fanboys?
They're in trouble, actually, a little bit now.
All right. So we got quite a bit of reaction on YouTube last week because of our stance on Apple. And full disclosure, as I do every single week, I have been wrong on Apple stock since 2016 when based on the business, I felt that demand for the stock was going to go down. Never thought that really Warren Buffett, who promised that essentially he would never buy any tech stocks, then comes in, I think sometime in 2016, and just swallows up a huge amount of Apple float. And the way that I look at it, that kind of created like a base scarcity. And then, of course, then the buyback show really takes off. Anyway, but we said something, Ian. We said a whole bunch of things last week that we've had more time to kind of look into, and it really is beginning to play out. And so I said last week, Apple, I mean, they have all the elements of an America 1.0 company.
Right.
All the elements. And you can see, let's put this first graph up, which is Apple's debt outstanding in 2000, and they begin borrowing money in 2012.
Right.
You can see that chart there, and they now have quite a bit of debt outstanding.
Yeah.
And most people seem to be unaware. They focus on the cash, which is being rapidly spent to buy stock, and they're borrowing money for at least some part of it, or else also to fund their dividend.
Yeah. I mean, that's like their two biggest sources of spending are buying back stock and paying dividends, and they're using debt to do it, which like kind of doesn't make sense because they already have a ton of cash to begin with.
And we'll tell you why this matters in terms of those folks that are very tied to the S&P 500, which we definitively are not. We are definitive.
Right.
America 2.0 in some ways is, I guess, maybe a kind of proxy might be the S&P 500 equal weighted if you're going to buy an index. But let's keep going on Apple, and we'll explain to you why all this matters. So they now have a substantial amount of debt that they have taken on alongside with this desire to, I don't know, buy their entire float back. I have no idea what it is. And is also come alongside with a complete, really, zeroing of actual any real innovation at the company.
Yeah. I mean, like a couple weeks ago, they were talking about buying ARM possibly, and then NVIDIA came in when they didn't move fast enough, or they said they didn't want to after all, and NVIDIA came in and they bought them for $40 billion. Apple had way more than that. They could have afforded to do that easily, and it would have grown their business a lot. But they lost out, and that's kind of been the pattern recently for Apple in general.
100%, because buying into ARM really would have given them this capability now to really become a leader in artificial intelligence, which is very much related to chip speeds and logic systems that you would now start to develop. You'd have those kind of ideas within your company. It would now also feed into all the devices that you might be thinking about introducing in the near future. It would never just immediately increase the iPhone base nonetheless, but how it would seed years and years of innovation.
Right, exactly.
And Jacqueline, who is our amazing team member that works with me on Profits Unlimited, which is our flagship newsletter, goes for about $100. If you're interested in that, just check in the description below and there'll be a link. And she saw me putting up some of these charts, and she wrote me this, Ian, and let's just put up Jacqueline's message there. I'm just like X out Jacqueline's last name. And Jacqueline wrote me and said, I see Apple coming up for tomorrow's IanCast. Let's put this up while I read this. Just want to share this. A reader posted the makings of a great subject line, the comments of your last video. And it could be a cool way to paint the transition of America 1.0 to America 2.0. And then she put up this note from someone in response to last week's discussion, which is that this is turning out into a Buffett versus Musk scenario, which is Buffett is all in on Apple and in a very America 1.0 way of looking at the world, where buying, like by borrowing money like this to fund a dividend, to be against spending for R&D, against spending for innovation, and then to take all this money and then, here's chart number 2, we'll put this up, to buy back stock, to collapse the shares outstanding. Look at that chart, Ian.
Right. It's unbelievable.
Yeah, I mean, that to me is a chart of like the internal destruction of the imagination engine, the creativity engine, the innovation engine that is Apple, which is that the entire company now has become about its stock price.
Right. Yeah, exactly. I mean, 100%. I don't understand, other than it's so like short-term focused.
Yeah.
They're using their money for crazy stuff like that.
Right. And then, here's another chart I came up with, which, shows you the buybacks per year. The buybacks, I believe, are equal to, like 80% of the S&P 500 in terms of their total worth or something like that.
Yeah. Yep.
Yeah, and just to show you that we have gone and looked at this, so you see that chart that says Apple share buyback pace on annual basis does not include this year. It's I believe including this year, it's on pace to be in the range of about $400 billion. And here's it by quarter, which is from Y charts, and you can see this thing getting going, and this collaboration between Tim Cook, who obviously is critical to making this decision. He's an accountant by trade, rather than an engineer, rather than somebody that pursues innovation, has no real kind of technical basis or any sort of innovation basis, has to be the engineer of this policy strategy that's being pursued.
Yeah, exactly. And I don't think that any company is really going to ever buy back this much stock again. Maybe like way far out, but I mean, this is like unprecedented.
Right, and it would be fine if they were actually innovating, and we also had 3 new, incredible new devices that were changing the world, like the iPhone also introduced, but it's been 13 years.
Right.
13 years since the iPhone was introduced, and they've had all this money. Those 13 years could have been used something. And then last week, Ian, we talked about the fact that Apple does act like a little bit like a Death Star. In other words, you can see, so here's this chart, and we told you last week that once the Apple show begins, which is related to them announcing their split, where it draws a lot of very inexperienced traders who really have no understanding of what a stock split is, have no understanding of market capitalization, have no understanding really. They all buy in all at once post that split, where Apple now starts to suck in the liquidity that's there in the stock market, and people come to bid this higher, thinking that other people like them are going to come after the split and bid it even higher from there. Yeah. And that, of course, has not materialized. And you can see that Death Star impact, which is that Apple starts to go up, and then that's the red line. And then you see that the green line, which is the S&P 500 equal weighted, and it does carry the S&P 500 cap weighted up until almost exactly the point. You can see Apple peaks, and the S&P 500 cap weighted also peaks at the same time. And then they both go down because the S&P 500 is so dominated by Apple that it pulls it down. And now you're beginning to see once again what was true until about June, which is the equal weighted, which is dominated by smaller companies, actual innovation companies, actual growth companies, starting to outperform again.
Exactly. So yeah, you pretty much summed it up there, but Apple, I think at its peak was like 7% of the S&P 500. So, any sell-off in Apple was going to ultimately be a sell-off in the S&P 500, just because, people don't like seeing red in the market. And Apple had such an influence on the S&P that if it goes down 4% or whatever, the S&P is going to be, flat, maybe up a little bit at best, but most likely down. And so there's selling in other stocks as a result, but we're seeing pockets in the S&P 500 of growth and buying. So like the high growth companies like biotech, semiconductors, things like that, which are not nearly as big. A lot of those companies are like $20 billion or less. And those companies are now kind of inching higher as Apple and, Microsoft and these other trillion-dollar companies that have such a big influence continue to drop. And that's why the equal weighted has, such a better performance record in September so far, because these smaller companies are doing better.
And then Amber, who's our amazing colleague, put up a note. I forget what she said, but the S&P equal weighted is having the best performance since 2009 this year.
Yeah.
So that's another sign. 2009 was another indication that the market was going to go up. That was a bull market, and where the small companies began to dominate the performance. And we're seeing that again. It's a very positive sign for America 2.0 companies. For the America 2.0 market, the S&P 500 cap weighted, which is dominated by Apple, dominated by Microsoft and others. I have far less concerns on all these things with respect to Amazon, Facebook, or Google, because they are all still innovating, and they're also, their policy is to do something with their business rather than just pursue stock buybacks.
Right, exactly. Yeah.
Right. And here's the last chart I'll put up on this, which is that Apple now since then has dropped nearly 18% since that peak. Yeah. 18%. So I believe the peak point you said when we were having our investment discussion yesterday, our team discussions are on Thursday, and a lot of our ideas that come out of the IanCast, and we tend to first have them in our investment discussion between ourselves. You said that you felt that Apple had gotten to $2.3 trillion in market cap.
Yeah, at least. I think it was a little higher, between 2.3 and 2.4.
So if we round this out to 20%, that's $480 billion approximately, right, that has come out of Apple. This is, I mean, I know it's probably less. Okay, even if it's 400 billion, heck, yeah, even if it's 300 billion, that money, Ian, is going to come back into the stock market.
Yeah, I mean, there are entire industries that we invest in that aren't even that big. So that's like a whole industry that can come from that money that's just been sold out of one stock. It's pretty incredible.
And you can see that there is still zero innovation at Apple. They just had their, whatever you want to call it, their product day, and they introduced some marginal improvements to a watch. The phones, yeah, are coming a little bit later. However, those are leaked well enough that everyone knows approximately what those are. And the smartphone business industry, that segment of the market, has been in decline for a great period of time. In other words, minus some sort of huge jump in the capability of a phone, there's nothing you can, there's nothing that at this point, whether it be Apple, Samsung, or anybody really can do. They're all actually competing in a declining business.
Right. Yeah. Especially in the US, where Apple has most of their market share. They don't do well anywhere else. So it's trouble for them, because their biggest customer is the most mature market that is now, kind of dropping off and buying more Android phones.
Right. And many people think, well, Paul, and we have gotten this, well, Apple's going down, the market's going to crash. We believe in something else. We actually think that this is a very healthy phenomenon, which is that people have just been blindly putting money into the S&P 500, bidding up a company like Apple, where the company's already bid the stock up to such a high price, and you going along with them to buy it, in our judgment, is going to be a historic mistake of significant magnitude. A company bidding its own stock price up is just, I don't know. Can we say, I mean, that just seems completely wrong.
Yeah, for sure, 100%.
Stock buybacks were intended to be where you might buy it when, let's say, okay, if your stock crashes because people panic, you drive it down, it can have an impact on your price. If you have enough money, you might go support it, into like a crash in 2009 where your business is actually good. There's no actual issue. And you're like, oh, no, the market makers have walked away. There's no liquidity in the stock market. And the company says, hey, well, we actually have a rainy day fund. And yeah, you want to sell your stock for nothing? Hey, we will take it in. And then you might do then what Tesla is doing. Tesla's never bought back stock because they're growing so fast, they need every dollar that they can. Then you would actually sell it back into the marketplace at very high prices and then fund high growth ventures, high growth projects like what Tesla is doing.
Right. Yeah. I mean, they're worth, I think, around $400 billion. And then NVIDIA is also, I believe, at least 100 billion, maybe 200. these are huge companies that are, that are still innovating and still putting that money towards growth rather than buying back their stock. And those are the companies that are going to end up paying off in the long run, not companies that are focused, number one, on buying shares back.
So, I mean, we'll close this Apple discussion, market discussion, saying we're still bullish, optimistic, positive on the market. However, we are definitively not on Apple. And we would say the S&P 500 cap weighted version is going to struggle. And we believe that the equal weighted version, that's the one that's going to outperform, because that's where some of the America 2.0, there's plenty of America 1.0 companies in the S&P 500. We want to make this clear.
Yeah.
However, there are enough America 2.0 companies in there that over time you will see this gap really start to extend more and more. And circling back around to the Buffett versus Musk, so there was a point at which there was a rumor, I believe it was like 3 years ago, someone will look it up and post it up and see what year it was, where it was rumored that Apple might buy Tesla. I think it was actually a couple of years ago. So it was a couple of years ago. It was after Buffett had bought in his 40 billion, which is now worth 160 billion, whatever. He's done very well. I make no mistake. We're not pretending like, he hasn't done well. However, the impact on Apple is terrible. And Buffett came out very clearly and said, and it's rare for him to do this with a company he's invested in, and said that he felt that it would be a really bad idea.
Yeah, right. I do remember that back when they were saying that Apple was going to buy Tesla, and then that kind of dissipated, and then that they said that they were going to come out with their own electric car. And I mean, that would have been a good idea. If Steve Jobs was still in charge, probably would have happened, or at least something to that effect of that magnitude of growth. But, none of that ever materialized.
Yeah, they've been telling us about all this insane innovation that is going to come out. And we've really generally seen what I call tinkering, bigger phones, phones with, more cameras. These are all incremental, slightly faster chip, a slightly more efficient chip. However, just think about some of the things that probably because Buffett want them to continue simply buying back stock. They've lost their lead in artificial intelligence, what they had with Siri, gone.
Right.
Gone. In terms of formats, which is a marginal innovation in terms of folding phones. Still, I mean, other people are taking chances. They're learning things in terms of formats, in terms of displays, also gone.
Yep.
Batteries, which might have then had application into electric cars if they could have invested into that. So these are all the opportunities by having someone like Buffett be there, which is kind of like, we talk about Apple being a Death Star to the S&P 500. Buffett is like a Death Star to Apple.
Yeah, basically.
Right. I mean, okay, so enough about that. Nonetheless, we do want to make clear that the impact of Apple, you're going to see it in Apple is in the Dow, Apple is in the S&P 500, Apple is in the NASDAQ. There's the NASDAQ 100 and NASDAQ Composite. Tesla, to make it clear, which is very much now the leader of America 2.0. Would you agree with that?
Oh, yeah, for sure.
Yeah, I mean, it is not in the Dow, not in the S&P 500, not in the S&P 500 equal weighted either. It is only in the NASDAQ Composite, and it is in the NASDAQ 100.
Yep.
It is in the NASDAQ 100. And yeah, I mean, and Tesla went through a split. So Elon Musk, Ian, they hit the high bid on Tesla, and they're going to use it to actually grow the company. So anytime we would say Tesla over Apple.
Yeah, 100%. Yeah, I mean, they are the Apple of America 2.0.
And we would definitely go with Musk over Buffett for sure.
Yeah.
I mean, there's a kind of rivalry that's going on, and and Bill Gates is out there kind of telling people that Elon Musk is not everything that people think it is, and we disagree. We think Elon Musk knows a lot and understands a whole lot. This is a guy that started an electric car company, has started the first successful space company, SpaceX, Neuralink, the Boring Company, which is potentially going to revolutionize transportation.
Right.
And I don't know what Bill Gates is doing, throwing shade on
and PayPal back in the day too, the first really big digital payments company.
Right. So I have no idea what Bill Gates, but the mainstream media definitely seems to have a very America 1.0 bias.
Yeah, that's true.
They seem to prefer those companies. They hype Apple up a great deal, every small little thing, and they throw shade at Tesla as much as they can. Give publicity to shorts that are barely short anything. The shorts have lost probably about as much money in Tesla as Apple has used to buy back stock.
Yeah, probably.
I
Apple's bought
know.
back more than Tesla's worth.
They have. They have. All right. Enough on that. We're going to point short. I believe there's never been a better moment to actually swap out, really, in terms of America 1.0 to America 2.0, because this divide, this fracture, is no longer a transition. Ian.
Yeah.
It's no longer a transition, and you see that in the stock market, and we see that in the crypto markets too.
Oh yeah, yeah. Bitcoin. Speaking of which, one of the biggest things with Bitcoin that I'm seeing right now is how much is continuing to pour out of exchanges, which means people are holding on for longer rather than just trading it on exchanges, buying it and then selling it like a week later. They're getting it completely out of the exchange to put into their own personal wallet, or even to use in what we've been talking about a couple times is DeFi, which in order to use that you have to transfer Bitcoin onto the Ethereum network, which is I don't want to go into detail, but it's necessary to kind of deal with that. So I've seen that the amount of Bitcoin that has been transferred onto the Ethereum network just went up 10% yesterday. Now there's almost 100,000 Bitcoin on there. So that's been transferred off of exchanges too. That's a pretty big chunk of it. So now we're starting to see, the crypto market and if you want to call it an industry, we're starting to see that really take shape here. And Bitcoin is not just being used as a store of value. It's actually being used to fund part of this, DeFi revolution that we're seeing on the Ethereum network.
Right, and that's the nature of genuine innovation. It creates industries that did not exist prior to it, and because only that innovation is capable of creating that. And so it has certain exclusivity. So we had thought initially that, we had pretty modest ideas initially about crypto, however, that it's going to clearly replace insurance, banking, finance of various kinds. Ownership structures will go into blockchain and get embedded into coins, tokens, all of these things. However, there are new industries that are just really out there that seem like to many people might be wild ideas. And however, the idea that Facebook today would be worth, I don't know, $800 billion was like, well, what's the big deal? People putting up a few pictures. I remember people saying that when Facebook first started, Ian.
Right. Yeah, I know. At first, it's kind of, everything is kind of cloudy, but as the fog starts to lift, you can see what the actual purpose of it is. And now, another thing that's coming out of DeFi is, people can basically make money just from owning a certain coin, like a dividend, but we've seen way higher amounts paid to people. There's this one exchange, except it's not a normal exchange. It's called Uniswap, and it just went live yesterday or 2 days ago. And everybody who participated in this exchange, while it went live, from beta test into live, situation, they got paid 400 Uniswap tokens, and that, after the launch was worth like $1,500. Now it's even higher than that. So no matter how much money you had in there, you just made like a free $1,500.
Right. And I saw you texted me that it had gone on Coinbase, and I saw today that it's up 30%. So
Yeah.
the 1,500 is worth probably like 1,800 now, Ian. So well done to you. Yeah, you should have gotten me in on that. You may have mentioned it. I probably just didn't pay attention to it. But that also tells you that the nature of ownership is changing, where before there's the known way of, okay, you start with venture capital and that way. And here's something where you participated as a beta tester in a company, and then they give you tokens, coins in exchange, which are now, you're a part owner of the exchange, and then you have something of value. So this is something new in terms of how crypto is already revolutionizing ownership.
Exactly. Yeah, that's the big thing. It's that's what gives these tokens value, is that you're a part owner of the exchange, and there's no hierarchy or whatever that you see in a regular publicly traded company. It's all decentralized.
Right. Correct. Bitcoin is, after it's going through its mini crash that we talked about last week, is about 11,000. It feels like this has now gone. It would have, in my sense, it crashed to 3,800 in March as part of what happened with pretty much every market. People panicked, sold.
Yeah.
And then it has really gone through the levels and has like sort of really sat at all the sort of high levels, 8,000, 9,000, 10,000, sort of sucking up supply of people that clearly have no desire to own Bitcoin, disbelieve in it. And I'm thinking that it's already done 11,000 once before. And I feel like the stay at 11 is going to be brief. And from there, I doubt that there's a lot of people that really held from the previous high in 2017 at whatever, 19,000 something to 3,500, which was the initial bottom, which was in 2018, right?
Yep.
2018. And then we had a confirmation of that bottom this year where it never went below 3,500. It went to 3,800 and that bottom was bought almost immediately.
Yeah.
In a big way.
Oh yeah, for sure. I think it was 6,000 like a couple days later.
Right. So that's another sign of a solid bull market. In other words, there are people that were clearly waiting to buy, and there was insufficient supply at that price to actually take in all the money. So that money came in and continued to bid higher, and they took that out. I think the $12,000 recent peak was what? I guess 2-3 weeks ago.
Yeah, I think it was like September 1st or something like that. Right around actually the top of Apple and the S&P.
I was just about to say that, right? Yeah, it's the same thing. And now it does seem like Bitcoin, the people that are in Bitcoin are similar to so many America 2.0 stock buyers, I guess.
Yep. I mean, to stay in Bitcoin and especially the other cryptos, you've got to have some tolerance for risk. You've got to be able to withstand volatility. So it's kind of like owning small cap stocks, or I even call it, with especially altcoins, it's like you're basically a venture capitalist because you're investing in projects way before they even really take shape in a lot of ways.
Right, and in some extent, going back to the original thing, the Buffett versus Musk. I mean, Buffett is at this point is a very sort of looking at like what is known, and Musk is looking to the future, whether it be space, Tesla, all the industries that can be created. And it's a very similar viewpoint, America 1.0 versus America 2.0, which is that the folks that are participating, whether it was in Uniswap or anything else, have a completely different view of the way the future is going to unfold than somebody like Buffett.
Yeah, absolutely.
All right, so we've done a lot of this. I did see just before getting on, no real new news on cannabis. So we did have this one story that was posted in one of our channels, Ian, about California taking in less money from taxes from cannabis. However, in that article was also their going assumption of that cannabis is growing at least 15%.
Right, yeah. And, California is getting to the point where they're kind of a mature market at this point, and the companies that are dealing there are facing they've pretty much filled the areas they can, and in the other areas it's kind of like a regulatory battle at this point. But there is plenty more room in California, and they make up like a huge percentage of sales across the U.S. I mean, and then there's places like Florida, which has over $1 billion in sales, or is projected to get over $1 billion in sales this year. And it's only legal on a medical basis. It's not even recreationally legal yet. So there are a whole bunch of states that are going to end up being like the next California. And the market overall for the U.S. is still like wide open. And
I saw right before getting on as well that the House is apparently no longer going to take up its decriminalization bill. Nonetheless, right. People's like, hey, Paul, that shows you something. It's like, well, it tells you that this is still on the national agenda and it's likely to happen sooner rather than later. And we can tell you the stock market will not wait for it. It will look forward, price in what is coming, which is the fact that even that this bill is where it is, tells you it's on the path to being passed. And with that, it will really set the stage for enormous, very rapid growth, and then also a lot of innovation and commercialization of cannabis.
Oh yeah, for sure. It's going to be, once it was legalized in Canada, I think, they had like months worth of sales in the first 24 hours of recreational legalization.
All right, Ian, before we close off, last mention, Battery Day is coming, and Elon Musk has promised, in his words, according on Twitter, big things.
Yeah, big things.
Big things. Now, everyone can laugh. However, who thought that the Cybertruck would look like the Cybertruck? No one.
Right.
So he says big things.
Maybe it's code for a semi. Or a plane.
Who knows? We can only go. All right, let's close this IanCast off. Ian, you go first. I'll go next.
All right, everybody. Happy Friday. Thank you so much for watching. Have a great, safe weekend.
And this is Paul saying bye.